Hey guys, I'm Becky and welcome back to my channel. This is Enduring Finances, all about personal finances and finding your way to financial independence in the end. What is going on with the stock market? Well, to keep it simple, a group on Reddit started a buying trend of the stock GameStop. And that was after they identified that there were millions of shares that were being shorted by Wall Street's own large hedge funds. And this created a short squeeze scenario between the Reddit group and average traders like you and I and the Wall Street people, because those Wall Streeters, those large hedge funds, still have to buy back those shares that are being shorted. Thus, it created an incredibly volatile market with the standoff still playing out between these groups. So what is a short position? A short occurs when you borrow a share of stock from one person, then sell that share of stock, which is still temporarily yours, and you have to buy it back, to someone else. The idea is that you think the price of the stock will go down. Then, when you buy that share of stock back, the price will be lower than what you originally borrowed the share at, meaning that you will make a profit because the stock price fell, and you get to keep the difference. Why does that matter? When you buy a stock and the price falls, the most money you can lose is only the initial amount of money that you invested in that stock, your purchase price. But when you short a stock, it goes in the opposite direction. There is no limit to how high that price of that stock can go. The price can go up hundreds of dollars, and because you have to buy back that share or shares, because you only temporarily have ownership of it, you can lose hundreds of dollars more than the initial amount invested. What makes this situation unique? The big hedge funds on Wall Street were almost positive that GameStop's price for stock was overvalued. So they shorted it like crazy, anticipating that the price would decrease over time and they would make a lot of money. But that view wasn't the same for everybody. Michael Burry made it known that he owned shares in GameStop. Other everyday retail investors started buying shares, thinking some positive changes were coming based on the data that they were seeing. Especially once Ryan Cohen, the co-founder of Chewy, joined the board of GameStop after making a large investment into its stocks in the fall of 2020. The Reddit group, Wall Street Bets, identified the opportunity to make a profit off the large hedge fund's vulnerability. More than 100% of the shares that are available on the market today are being shorted. In fact, as of today, there's still more than 120% of those shares that are being shorted. That means that there are more shares that need to be bought back so that they can end their short positions than there are available on the market for them to purchase all at once. So the group started encouraging people to buy the GameStop stock. And that led to a short squeeze, where the sellers, the Reddit users, and the average day Joes and Janes have the power. They can set the price that they're willing to sell this back to these big Wall Street guys because there aren't any other shares that they have. For example, think of the toilet paper rush of 2020. The demand for rolls of toilet paper skyrocketed basically overnight. There was not enough toilet paper for everyone to get all that they wanted. Some people had bought more than they needed and started selling toilet paper online for double or triple the value. They knew the supply was limited and the demand was high because people needed toilet paper. That is what Wall Street Bets is doing to big Wall Street and the hedge funds. They have what they need, the shares of stock, and they're planning to sell them at a much higher price because the hedge funds must return the shares of stocks that they already owe. Social media has played a large part into this situation that we have, between the Reddit group encouraging everyday investors to buy GameStop shares and different influencers tweeting and sharing the message and just spreading the knowledge. It's gone viral, and because of that, the stock price has been all over the board this past week. $468 on January 28th. Which was then closely followed by the low price of $162 within less than 3 hours. So the price went from $468 to $162 in less than 3 hours. That's a ginormous drop in price. But don't worry, it went back up almost just as fast. At the beginning of the week, GameStop was valued at $64 a share. By the end of trading yesterday, the price was $325 a share. The short squeeze didn't stop with GameStop though. It has moved into different areas in the stock market: AMC Theaters, BlackBerry, and other volatile stocks. The hedge funds and large investors have felt the losses of more than $70 billion already. To top it all off, certain trading companies commonly used by everyday retail traders like you and I are being called into question for potentially limiting and restricting the ability to trade specific stocks. There's even class action lawsuits that have already been filed against them because customers weren't able to make those trades with GameStop and the other stocks going on. It's kind of similar with what happened with the toilet paper rush. The supply went down and the demand went sky high, so big that businesses started to limit the amount of toilet paper that you could buy at one time. When it happened, some people were mad because they didn't have enough, and others were happy because they knew it would stop people abusing the situation for their own profit. So that's kind of what those businesses did. Is that fair? Is that the right thing to do in this situation? The difference with this short squeeze is that the ones that actually need the toilet paper, that have to have it, are the ones that have gotten all the bailouts. The wealthy hedge funds, Wall Street millionaires. And the everyday people, your neighbors, you, me, your mom, those same people took the losses out of our own retirement and our own investing accounts. We didn't get a bailout. So today, that role is kind of semi-reversed. The everyday retail traders are holding the supply, and they're holding it hostage against these big wealthy hedge funds that need that toilet paper. And while the hedge funds might be able to hold out for a few days before they have to buy this toilet paper, they're not going to be able to hold out forever. Eventually they're going to have toilet paper, and they're gonna have to pay whatever the going price is, which right now is $300 a share. And eventually, when everything settles back down and the bubble bursts and toilet paper goes back to its normal sale, just like it is now, the stock market will even out again and the price will go right back down. This is why the situation is so risky for everybody that's involved. If you go in right now and you buy the stock for $400 more than what it's worth, and you can't sell it before the market evens out, you're going to lose that $400 or however many shares you buy of it. No one really knows exactly how this is going to play out or how long it's going to go on. If you try and jump on the bandwagon, you could end up losing a lot of money. GameStop and the other stocks that are being targeted are not following the traditional market rules. How this plays out is still up in the air. As a formal disclosure, I am not a financial advisor. I am not giving you advice to buy or sell or just sit and watch the stocks go up and down. I'm giving you the resources to learn and conduct your own research about what is going on in the market today so that you can make your own knowledgeable decisions for your future.